Chris, who is going to be out and about for a few weeks, but rest assured he will return. This is Overtime. I'm Ilya Spivak in San Francisco. Mr. Batista there is in Chicago. Dylan Radigan ostensibly in Milan. Gentlemen, how goes it?
I'm great. Thank you for having me on the show today. It's been a wild run in the market, so just trying to hang on for dear life. I mean, Dylan's been screaming it for months and months. It's up only. It's just buy them every day. They're cheaper every single day.
Thinking is where money goes to die.
It's very true. It's very true.
Thinking is where money goes to die. Mm-hmm. And I'm happy you're here, Nick, because I'm going to have to deal with Ilya's naysaying for the next hour.
I have no naysaying. I got shaken out of my stock shorts last week, and so I have no horse in this race on the indexes here. In fact, against all odds, I'm a little bit long because there's a couple ETFs that I'm long outside of the indexes that are longer-term holdings, and so sort of end-of-year type things. And so I've ended up actually net long stocks here.
I mean, it's been an incredible run, and I feel like I can do the Vecchio side of the equation of being the Super Bowl, but at some point, don't you lighten up, Dylan? Isn't that like at some point don't you take profits? Isn't that the move?
No, hell no.
Never. It's every day they're cheaper today than they will be tomorrow.
Yeah, what part of the word supernova do you not understand?
That's a T-shirt that we need to get made.
It really has been.
So anyway, I'm as optimistic as I've ever been. I mean, if Ilya has been flipped into a long position, I mean, I guess the thing I'm most interested in is a rising dollar. That's the final frontier from this misery of the first half of the year in the currency market, but at least misery for me as a dollar earning euro spender. It has been unpleasant, but I'm happy to hear Ilya feels like we're making the turn. I'd like to get back. You think we can get back to 95 cents there, bud?
I think that's probably a little bit of a stretch, but it does feel like the dollar hasn't made a new low since July. It's a little bit heavy here, but it hasn't made a new low since July, and all we've been talking about is how these Fed rate cuts, or certainly this one coming up, is more and more and more and more certain. It's 96% now in Fed funds futures, so it's basically a given. So that the dollar can't keep selling off on this, that this is not a dollar negative story going all the way back to the beginning of July, that's curious, and that tells me the price action just doesn't care, and therefore this thing is just waiting for an excuse. We might get it this week.
Is the Fed rate cut and the absence of many future Fed rate cuts basis for dollar strength?
Well, I think the disconnect between markets and the Fed on future rate cuts is really where things get interesting.
That's what I'm thinking.
In June, the Fed said, we're going to do 75 basis points between then and the end of next year. And that factored out to 50 basis points in 2025 and one cut, a single 25 basis points for next year. The markets obviously have very different ideas. Yes, they've baked in this cut. Everybody agrees that we're going to go in September. But the markets are erring on the side of three cuts this year at this point. That third one is about a 50-50 shot, but they're certainly seeing that as a significant chance. But for next year, the markets are at 3, and the Fed's at 1. So I think what the market's going to want to see is for the summary of economic projections this week to at least start to kind of acknowledge the fact that the Fed is going the market's way. They'll at least have to, I think, add a cut for next year in the forecast for the markets to look and say, okay, fine, it's not everything that we think, but they're going our way. They're moving in our direction. And if they don't do that, I think the market's going to get left disappointed, and it'll be one of those buy the rumor, sell the fact kind of things, where the dollar essentially goes, well, we knew the cut was coming, but if they don't want to embrace a more dovish outlook than they did in June, then they're not going our way. That's relatively hawkish, sort of in comparable terms. I also think stocks aren't going to like that kind of outcome either. But I certainly don't think there's anything to sell. Nick, so you see anything in the spirit of lightening up, as you were saying? You see anything to be opportunistically betting against risk here?
No, I mean, I've been lightening up, but I feel like I'm stupid for lightening up because every day I could get more if I just held. And so that's my biggest question. And we went through it, the last time Jay Powell took the stand and, confirmed everything we already kind of knew, was that, September was rate cut season and it was coming. And that seemed to be consensus news. And then the market was up 100 points. And now I'm thinking to myself, Wednesday, we know exactly what's going to happen. There's going to be rate cuts. Yeah. Right now, the CME FedWatch tool has us 95% for 25 basis points, 4% for 50 basis points. I guess some people think there's a higher chance that there's 50 basis point, yada yada yada. I get it. Rate cuts are here. On Wednesday, does the market, like, the volatility is basically at lows? It's telling you that nothing's going to happen, but is that I'm worried that I'm going to miss the next big move.
It's interesting because the last time Powell spoke, right, there was no policy announcement in August. There was the Jackson Hole thing. And so he gave the Jackson Hole speech, and it was good for a day. And then the market kind of stalled. And that was really the story of August. It's kind of interesting. The markets did basically nothing in between the CPI numbers we got last week and the CPI numbers we got a month earlier in mid-August.
From like an ETF level, they did nothing, but stocks are moving. I mean, you got
individual ones, of course. Yeah,
individual stocks. The dispersion trade is very much there. I mean, you had Tesla catching up today. I mean, Google looks like a meme stock. It's up at $250 here. It's gone up, $60, $70 in the span of 2 months. You got the pigs flying, your quantum stocks and uranium stocks and you name it.
Is this the TikTok thing, you think? And obviously it doesn't have anything to do, I don't think, with TikTok itself, but we got a headline today that apparently the U.S. and China have reached a deal on how TikTok is going to stay in the U.S. And apparently there's a call, because there's always a call, because there's always a cliffhanger with these guys. Mm-hmm. There's a call on Friday between Trump and Xi where they're going to thrash out the last of it or give it the go-ahead or whatever it is. I mean, Bessent was speaking about it as though it's a done deal. Obviously, TikTok itself is what is, of dubious economic impact by itself, or at least of debatable economic impact. But if the U.S. and China are agreeing on stuff like this, and there's maybe a little bit of a thaw, is that why we're getting all this tech optimism, do you think? Because, I mean, you look at this sector-wise today, and it's communication services in the lead. Mm-hmm. I mean, tech itself is obviously up a ton. It's a pretty skewed kind of day.
Yeah, I think it's more of what we've been witnessing over the last couple months. It's FOMO. I mean, it's the every day they get, they go up. It's exactly what Dylan has been talking about. It's the supernova. I mean, like, that's what it feels like in markets. Who would ever trade to the downside when you see markets like this?
Not even me.
Yeah, it's hard. And if you did, the macro sounds right, but the market goes the other way. It's
Yeah, I mean,
it's a tough pill to swallow. It's tough to be
Yeah, well,
on
the
the
only
other
way
side
you
of that.
lose money is by thinking, because any rational thinking individual can very quickly come to a list of reasons why the market should not be at its present level and couldn't possibly sustain itself. You yourself, Nick, recently started thinking when you thought about lightening up your position because of your gains, which clearly had evidence of thought. But again, I don't advise it.
There's all the old adages, you know, buy low, sell high, all those sort of things. You got to just throw them out the window.
well, so and this is where it gets interesting now. If you don't think and you just buy them, do you buy more here?
Where do you get the money to do it? You've been buying them.
Question.
You've been buying them every day for the last 6 months. When does or is this the next rate cut? Is that where we all get our next like round of funding where we can buy them up again? Like,
well, is that what it is? Perfect. That is the perfect way to describe it, because I was looking at this on Macro Money, the show I do right after this last week, and there is a lovely kind of symmetry here. Take a look at the continuous ES contract for a second, because there's a funny thing that happens. So you get the sell-off, right? Mid-February to early April, yeah. Everybody's freaking out about tariffs. During that time, Fed policy expectations go significantly more dovish. And of course they do, because the market's freaked out about the tariffs. They're like, this is a growth scare. Consumer confidence is falling off. Business confidence is falling off. This is going to be terrible for the economy, right? So stocks go down on growth reasons. Then the president gets religion about market discipline when the bond market freaks out with stocks and the dollar all at the same time in April and goes, whoa, 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 90-day pause. Everybody be cool. This is not that. Okay, stocks rebound. What's interesting is when you look at that continuous contract, Fed policy expectations obviously unclench because they go, oh, okay. We don't need emergency rate cuts, fine. And they unclench from that bottom in April all the way until about mid-May, which is exactly the point where the markets recover all of what they lost and basically come back into the bottom of the range they had in February. At that spot, the outlook for Fed policy for this year just gets locked in around the 50 basis points the Fed said in December and coasts from there. But the outlook for 2026 starts to blow out. And so the cumulative outlook starts getting more and more dovish. And stocks all of a sudden go, oh, well, we're just going to keep going higher then. And so everything we've seen basically since mid-May has been a near perfect inverse of the 2026 Fed policy outlook in the December 06 month. So if you look at SR3Z6, you can see it. Right around mid-May, you start to see this relentless march into a more dovish direction. Mm-hmm. So you can see it here. There's the April spike. That's where stocks bottom. Mm-hmm. There's a little bit of a recovery into the middle of May, right? The contract pulls down, so rates come up. Market goes, okay, no emergency. And then since then, it just keeps building and building into April's lows again. So how much of this stocks rally is about anything other than just cheap future money? Maybe that's how they think they're going to keep buying.
I mean, if I was to think...
Don't do it, Dylan. Don't do it. Don't do it.
Uh-oh.
No.
I would not advise. But if I was to do so, the thought that I would think would be this. The Fed's going to cut rates. The Fed's going to say something about something. They're going to, and something that they're going to say, somewhere in some of those somethings is going to be some comments that speak to the Fed's expectations, perhaps even concerns of more muddled or slowing or mixed economic activity.
They're going to have
That's the
to.
reason to cut rates.
They're going to have to, because they're going to have to sell it.
So they're going to have to say we're reducing rates and we are now more vigilant about the status of the situation, and which has more mixed influences, and we're concerned about evidence of headwinds and tailwinds that could result in different, more unreliable economic outcomes, or some gibberish.
Mm-hmm.
And if I was to think, I would think this, that the market, which is at these absurd levels, detached from all reality, oblivious to the headwinds of the tariffs, the complete dislocation between the normal economy and the financial economy and the tech economy, is completely detached one from the other. And the Fed's cutting for a reason. My thought is that when the market sees that the Fed is cutting for bad reasons because they are concerned about the health of the economy, that actually could serve. You could be setting up, I mean, again, this is just horrible on my part because it's just riddled with thinking. But you could be setting up, I think, a really miserable few weeks, actually, not just a miserable few days, based on the market in levels being where they are going into this, combined with the Fed's coming out and saying that they're cutting for the wrong reason. Wrong reason in the market sense. It's, in other words, we're not cutting because inflation is going away. We're cutting because we're concerned about growth.
That certainly seems to have been kind of the song and dance out of the Fed to justify these moves. And it's not like the market didn't know these moves were coming, but the Fed has obviously had to have some rhetorical cover for all of it. So they've started to kind of talk about risks to the labor market and yada, yada, yada. It's interesting because the markets have thought that the threat has been to growth and not a threat of higher inflation for a while. Break-even rates in the bond market have tellingly not gone up since bottoming in April in any kind of crazy way. And that's sort of how you get the SR3 contract looking the way it does. The market doesn't think there's an inflation scare, which is what the Fed is concerned about. The tariffs are going to be inflation and et cetera, et cetera. The market's not concerned about that. They're concerned about what the tariffs are going to mean after the inflation for growth. And we already got a terrible first 6 months of consumption at the first half of this year. Obviously, we haven't seen third quarter GDP numbers yet. We'll get retail sales this week. Consumer confidence fell last week. That's a thing. But we already have consumers under strain. The first 6 months of this year were the weakest 6 months of consumption since the first 6 months of 2020, which was the COVID lockdown. So not great, but clearly the market is concerned about that and not about some inflation something. So that could set up a sort of buy the rumor, sell the fact kind of thing, Dylan, to your point, where the market goes, right, well, speculation has become reality. We've been yelling this same thing for a while. The Fed is finally there and doing it. There's nothing to speculate on anymore. Let's just take some profits on this view that's worked for 4 months, 5 months.
And if I was going to get short, which I haven't been for months, I would do it right now.
But only for a short term. Because doesn't all that bad stuff, doesn't that just go straight to the NASDAQ and the AI story and all that good stuff? Like,
so that's why thinking causes problems.
I know. Well,
you know.
Unemployment, I mean, that just means that, that's more dollars in Google Gemini or Meta or whatever, or Microsoft. I mean, that's kind of what the market's been saying. It's like, who cares about that stuff?
Agree.
Like, you don't need any, House building, you don't need any of that stuff when you could just, build a server rack, right?
That is
It's the K-shaped economy.
definitely a very interesting part of this story, and we can maybe wax a little philosophical on this. I have been kind of beating the table going, yes, there is a ton of investment in AI in the sense that we're building the infrastructure for when it'll eventually get used and generate all of these economic benefits. But we're not getting the economic benefits themselves yet. If you believe the recent sort of data out of MIT and
No, it's like a
Goldman.
wealth consolidation. I mean, I think that this is the end game of capitalism, which is all the cookies go to the same, 4 places, and everybody else can eat dirt.
Well, I mean, it's not like we haven't had periods of wealth concentration and then distribution. I mean, we've all read the Great Gatsby, I'm sure, but capitalism survived. It's just we're probably on the cusp of some sort of reinterpretation or evolution, not unlike, let's say, the FDR thing that sort of changed the character of what we were talking about. It seems like and then of course in the 80s Reagan, and so now we're looking like we're going to renegotiate again.
Excuse me.
Dylan, what happens when the Supreme Court does away with the tariffs? How much higher are we?
Or lower.
I mean, if we go lower on the Supreme Court tariff extinguishment, I figure you got 10% to the upside.
10%. We got people in the YouTube chat. We're calling 10,000 on the SPX in 3 years. So we got another 60-ish, 50, 60% to the upside. I mean,
how many people think that if the Supreme Court were to rule against these tariffs, that would be the end of it?
I think it would be bullish. Why wouldn't it be bullish? Everybody's
because the markets have just spent. The markets have just spent from April until now benchmarking what this tariff thing means.
Yeah, and we're only 10% higher from the open.
Figured out what's going on, and now you would tell them, yeah, no. What you think is going on is not what's going on. I mean, is this the administration that's going to take that kind of a thing lying down? Or are they going to fight it absolutely and totally and tooth and nail? I mean, I think if you get these tariffs overturned, not that I think they shouldn't be, I am no legal scholar, although on the surface of it, it does seem like they have reason to be overturned, but far be it from me to know legally. But it seems like the markets would get the thing they don't want, which is more tariff uncertainty, and they would have to re-benchmark everything again. And maybe that's a good thing for a little bit, but I'm not convinced that it's necessarily good news in a lasting way, because it sets up a lot more chaos.
Dylan, did you catch the move in Tesla today? This is another story I would like.
And I saw the Elon tweet, which made me chuckle.
The 10 to 420 prophecy secured.
That's right.
Are we like back? That. Are we funding secured?
Funding fully secured. I mean, Tesla's one of those ones that it's sort of like Apple, Google. I mean, it's sort of, I would say that this thing with Tesla, what happened with Google a few weeks ago, all this is evidence of where thought gets you into trouble. It's like, just if you see the AI names going cuckoo bananas, and you're not in there buying the laggards on a relative basis, which have been Tesla and Google.
Amazon a little bit too. It played catch up a little bit the other day.
I would just look for the loser of the bunch and buy it, because it's just a matter of time until they leapfrog each other. That Oracle move was absurd.
Oh.
In
I got a
fairness,
question
data
in
came
front-
out today saying EV sales January through August were up 25%
Who said
worldwide
this?
year on year. This was data that came out of Row Motion. Row Motion is essentially a research consultancy, but it was reported in the news earlier today. Their benchmark came out today, and they were looking at year-on-year EV sales, January through August this year versus last year. This year, up 25%, which is a lot of percent, of which 6% was North America. So,
Wasn't that
But also,
after like
that's
some
why the
horrible
energy
numbers?
platform play, and it's, go
yes,
ahead.
yes.
And then the self-driving, and then never ends with these people. You know?
It's always just another like news headline. It's always a new FOMO. I mean, we had a month or two ago, weren't they talking about the BYD? How BYD was doing 50% more than Tesla was delivering, or some crazy number. And then now we flip the cards this month. It's a never-ending circle, it seems like.
No, so the question of the day is who's next up in the game of leapfrog? It sounds like you're hinting at Amazon.
I think that's one of them. I mean, Amazon, Apple can't do anything right. I mean, the iPhone Air is interesting though. Smaller.
Whatever. That thing's a bust. It doesn't. The camera's worse. The battery's worse. Nobody cares. Nobody wants a thinner phone is interesting if you can maintain the camera and the battery.
Mm-hmm.
But to trade off the camera and the battery for a thinner phone, it's a joke.
So,
Yeah, I mean,
what's your pick for the next mover, Dylan?
Apple,
I think Amazon is a leapfrog. I think Apple and Amazon are both great for the leapfrog. I think they're both great for the leapfrog, but I don't know what will cause the frog to leap. But I mean, I think there's got to be some AI related thing somewhere in the cooker at both of these companies.
Well, aren't we getting the TikTok news soon? Aren't we taking that one?
I mean, apparently on Friday.
So who's taking TikTok? Is it going to be Larry? Is Larry getting TikTok? Warner Brothers? He's just going to control all the media now.
It's interesting because what Besson said today, to your point, he was like, I don't have any details for you. I believe, he says, ostensibly because things can change between now and Friday. He goes, I believe U.S. ownership or a transition to U.S. ownership is how the TikTok thing is going to get figured out. So, yeah, it's a big question. Who?
That's the next leapfrog.
I would say not Elon Musk.
What?
Okay.
Yes. Okay.
Let's do that. I would say not Elon Musk. I would say probably not Tim Cook. Let's assume the president will make the decision based
If it was Tim Cook, that would be hilarious.
people he likes.
Yeah.
It has nothing to do with the companies.
So Meta then.
Does he like Mark?
He loves Mark.
Is Mark his favorite guy of the whole bunch? More than Jeff?
Mark's been around him a lot recently.
More than Satya?
Oh yeah, I think certainly more than Satya.
He hasn't bent the knee.
So Satya's not on the list.
No.
So you think Mark is
Might be Mark.
Is his buddy?
Elon has,
question
I
is
feel
who's
like,
his
gotten back into the good graces. Like over the last couple weeks, Elon has gotten more. No, you think that one's just that's severed
I think
forever?
the president holds a grudge much longer than all that.
That was a tough one. There were some things that were said in public there that were pretty.
I mean, this Epstein thing is still going, and Elon basically did that.
True.
But I feel like Bezos has kind of been,
He's getting closer.
getting in there.
Did Trump get an invite to the wedding though? That's the ultimate.
Well, who was next to him at that dinner the other day? Was that Zuckerberg?
I think that was Mark.
Ooh.
Ooh, what about Bill Gates? Wasn't Bill Gates sitting next to him?
That would be hilarious.
Yeah, no way. No way that's happening.
If he gives TikTok to Bill Gates,
That would be
that would be
hilarious.
amazing. That would be amazing.
I mean, talk about an incredible mid-season surprise.
What about Peter Thiel? He's a good old school Republican or new school Republican. I guess.
Our chat saying whoever owns the most Trump coin gets it.
I agree with the chat.
That could be a good one. That could be a good way. It's fair. It's, everybody has access.
The system, the methodology.
So
I mean, it would be a ratings bonanza.
Oh, I know what he should do. He should give it to his son, Don. Don can use Trump coin to buy TikTok.
No, Don's doing
merge it with Truth Social. Oh my God.
Yes.
Oh my God.
That's how you do it.
TikTok and Truth Social together as one.
Collateralized by a loan from Deutsche Bank that are collateralized with Trump coin.
If there was ever a move, it would be for Truth Social to get TikTok. It would be amazing.
That's the obvious move.
There it is. We've solved it right here.
Unbelievable.
You heard it here first.
With a loan from Zuckerberg and Bezos to pay for it. Under threat of some sort of horrible government intervention to their detriment. They're forced to issue a line of credit to Truth Social to buy TikTok.
And then special edition sneakers with the TikTok logo.
And then put Don and Eric in charge of the whole operation.
Tremendous.
Oy.
Unbelievable. Does DJT, does that Trump stock still trade? Can we buy that?
I believe so. DJT 1746 right now.
Was it a T? It's Truth. There's another one.
DJT Trump Media is. I mean, if anything, it's. I mean, if you were looking for something that's cheap, this is cheap.
Yeah.
I mean, it's been higher.
Dylan, what do you make of the gold and silver move / Bitcoin not participating? Why? Give me something. You got to be a Bitcoin guy.
I'm a Bitcoin hater.
Hater?
Hater. I was offered Bitcoin in 2009, turned it down, never liked it since.
Wow.
I have some resentment.
Yeah, that sounds like a grudge, if I've ever heard.
It's a little bit of a personal issue, but as far as gold is concerned, all I can say is stunning move. Absolutely stunning. And I wouldn't short it. I wouldn't buy it that or up, but I also would use the gold move as further evidence of my long-standing assertion to not think.
I mean, I'm still sticking with it. And in the spirit of not thinking, when silver broke its congestion range on Friday, I bought some silver against every perhaps natural inclination that I might have, and today it's up.
See, this is what I'm talking about.
Is it stupid? Yes. Am I long? Yes.
I was having this conversation with my dad. Is it just the fact that you just have to buy anything, whatever the asset is, whether it be a gold, silver, stocks, houses? Is that what the world we're in right now? Is it just like you got to get it?
If the driver is cheap money, as I'm increasingly convinced that it is, if the driver is the Fed is going to cut a bunch next year, everybody's going to get the cheap money that makes everything feel okay, right? Like there's all these risks, right? The moment you start thinking, you go, there's a risk over here, there's a risk over there, there's a risk over here. Meanwhile, the market's going, but don't worry, because the Fed's supply of Ambien will be greater than even they know. And as long as that's the case, then line go up. If that's what it is. And on Wednesday, we find out if it is what it is. Because if on Wednesday the Fed comes out and does this aw shucks thing again and goes, with the tariffs and the risks and we're not going to let inflation get baked in and 25 basis points next year, the market's going to go, wait, we were promised Ambien by the truckload. Where is it?
So you're saying that, but the big risk, obviously, I guess it's not apparent, it's not some grand thing, but if the Fed makes an indication that more rate cuts next year are in question at a high level,
Yes.
that'll be a test of the no thought rally.
Yes. Yes.
Then you might want to do some thinking.
Yes. I think every sort of, like, I always catch myself reminding myself over and over again. Like, it feels like I do this once a year. The market wants to believe that the Fed put is real and that the cheap money is invariably going to bail everybody out every time. Mm-hmm. Because that's what we've been conditioned to know basically since 08. Maybe a little earlier. And we have a whole generation of people where that's all they know. Anytime there's a bump in the night, the cheap money comes. But what if it doesn't? I would argue that since 2022, this is a different Fed. This was the most aggressive rate hike cycle since the 80s, since Volcker.
The question is, even in that situation,
that their willingness to cut rapidly is not such a foregone conclusion because it's a different Fed?
Because they're a lot more worried about inflation than they've been in 40 years.
Sorry, go ahead, Nick.
Well, I was going to say, even if it is, if there is some sort of pullback, is there any size of a pullback that's even going to scare any of the people that have ridden the wave for 10 plus years? I mean, like, what kind of move lower gets people away from buying the dip?
That doesn't exist.
I don't think it exists. That's the question. It's like, even if Fed policy changes or inflation comes back or whatever the
fewer rate cuts next year.
Yeah, like those are a thinking man's. That's a thinking man's bearish signal. But
yes,
if there's a 10% move, I'm sure my mother is going to get on her Robinhood app and buy the dip. And she, 100%. It's like everybody's going to be doing it. It's crazy.
It's full.
I mean, this is the interesting, like, easily the biggest question. So the pullback from the peaks in February down to the lows in April was 22%. Do we think we have another one of those in us? Maybe.
I mean, it would be crazy to think that you can't have a 20% down move.
Yeah.
I mean, you got it. You're like, this isn't unique. We had these in, COVID. Yeah. That was our last one. I mean, they come every couple years. It's just that, we've never had a sideways market. It's always been a drift higher.
Well, and I think that, I mean, equities have been biased in the direction of a drift higher, since the beginning of time.
Yeah.
If you want to go back far enough. I mean, obviously.
Yeah, but we're not talking about 1 or 2% higher for the year. We're talking about 10 or 12% higher for the year. Like that's meaningfully higher. There's never been, we haven't in the last 10 to 15, 20 years seen a prolonged period of time where, it went sideways. It's always been 10, 15% up every single year. And any dip, 20% dip, you look back 6 months, and you're back to highs. It looks like this V bottom. It's always.
Well, and in fairness, right? So the entirety of 2022 was a down year, but it was only down 27%.
Yeah.
That's not that far off the 22% that we've already fallen this year and have obviously already rallied back and erased it. Mm-hmm. The entirety of the COVID sell-off was 36%, so a little bit more. Obviously in 08, a little bit of a bigger scare from the top in mid 07, which is where stocks initially topped out, down to the bottom in March 09. that was the last big kind of holy moly. That was 58%. I mean, could we do that again? Are we stretched like that again? Maybe. The run up into that top. So if you look at the S&P from, let's call it, the lows in mid 2002, 03, sort of early part of 03, latter part of 02, into the top in 07, it's almost a straight line. It's a very, very, very quiet 6 years. And so could we have another, I don't know, 50-ish percent? Does that get people out of bed? Maybe. The thing I'm probably most worried about is that, okay, yeah, you get a trigger from the Fed, but things don't spiral because of a trigger from the Fed. Things spiral because people start thinking. If all of a sudden the Fed gives people a reason to think, that's why you spiral. It's not the Fed end all, be all, full stop. It's just the Fed goes, listen, you can afford not to think if the money is cheap. And so, okay, let's say you make a mistake, you lose some money, you get something wrong. If the money is cheap, you borrow it back, you go again, everything's fine. If the money is not cheap, you actually have to think about, like, where is your risk? How have you allocated your portfolio? Are you overexposed to this or that? And if there's a ton of reasons, as we're saying here, to be worried, but for thinking, the Fed gets people thinking over the course of some months. You could come down a lot.
As a massive wealth concentration in the tech sector, a massive threat to employment from the newest technology, at least in the short and intermediate term, a massive price pressure from the tariffs, and basically, even if the rate of inflation has gone down, it's not like prices have returned to pre-COVID levels.
Or close to it, yeah.
A block of cheddar cheese is still $15 or whatever it is.
Yeah.
You know, I mean, I can make a million reasons why the market is detached from reality. I just don't see any logical reason where I could advise myself or a friend to do anything that's based in reality right now.
I mean, agreed. And this is why I think the sort of thinking versus not thinking might actually be what everything hinges on this week. If suddenly the market gets from the Fed the message that, hey, you all need to think because we're not going to give you all the Ambien that you thought, whereby you could just take it, lie down, and relax. No, you're going to have to think. Then there's all kinds of things to think about. I mean, 68% of the economy is household consumption, and in the first half of this year, it was the worst since the COVID recession. That's 68% of GDP. That's not a happy thought. So the problem is that it's a thought.
Exactly. But I mean, I think you bring up the really critical point, which is the Fed is going to make a statement that is going to be laden with 1 to 10 different things that are intended to produce thought. But I mean, part of the beauty of not thinking is that when somebody offers you a thought, you just ignore it and buy yourself some more Amazon or buy yourself some Tesla. I mean, look at I think the real thing to move right now is to load up on Apple and Amazon as the two sleepers in the supernova right now. And don't worry. So, like, all this talk about things we might think about obviously has no basis in reality.
Not until the market decides that it must think. And unless the Fed convinces them that they have to think, I don't think they want to think.
Who would?
What about this weekend, Dylan? We got your murder drone headlines. You know, Russian drones flying over Poland and this place. Is that prophecy come into play in, or does that that doesn't matter either, right? I'm thinking too much.
I mean, the world ends once. I mean, I'm not talking about some Russian, Polish, whatever. I'm talking about AI with a fleet of mosquito-sized bombs that are coming to every mobile phone in the world at the same time. Okay, there is no trade after that. So
Yeah,
don't worry.
the Apple servers get hacked, and you just get location pinned, and all of a sudden you got a swarm of murderous mosquitoes attacking every person.
That's right. Run by AI.
Run by AI. There you go. I like it.
Pretty much.
Don't worry. If the murder mosquitoes come, Wu-Tang Killer Bees will counter them.
There you go. There you go.
Listen, the murder mosquito is a real thing, boys. Just, it's no joke. The Chinese
There's
have them.
nothing funny about the Wu-Tang Clan.
The Americans have them. The Russians.
As we have been told many a time,
really
Wu-Tang Clan ain't nothing to F with.
Imagine being a paranoid, like, Tasty Trade watcher, and you all start internalizing the murder mosquito. I shouldn't even say it. I'm sorry. It's not real. It's not real. Don't worry about it.
Yet.
Better to buy yourself. The real question, I think, was the first question Nikki asked, which is, okay, do you buy Tesla now after the pop? You buy Oracle now after the pop? You buy gold now? Like, if you really have a pair of balls on you, you're late, so to speak.
Yeah.
But you might not be wrong.
But that's my question. Do you look at the markets like that? Do you look at Tesla and say, you know what,
No.
I'm gonna grab a couple more today. Why not? Like, is that the thinking? Because it's hard for me to do that. I look at Tesla and I'm like, okay, I took a couple deltas off, on Friday, and now I wake up on Monday and the stock's up another $30, and I'm like, well, shit, why did I do that? I should have just held today, and then maybe I get some more today, and the stock's up again, and it's like, when do you say, okay, I'm full, or I don't have enough, I can't buy anymore, I physically can't.
Well, that's why it's hard. I mean, that's why people have a hard time with this.
Yeah.
Well, and you get to a point, I mean, eventually, one would think, where everybody at the margin that wanted to be a buyer is a buyer and is already long. And then whoever is not a buyer and wants to be a buyer looks at the chart, goes, here's where we are, here's how much lower we were like last week, never mind last month, last year. This feels expensive now. I'll wait. And eventually the thing just runs out of buyers and gets skewed. And then who knows, by the way, when that is. But if all of a sudden in that sort of a precarious state, the Fed tells you that you've got to start thinking, or somebody convinces you that thought has become necessary, the whole thing caves in on itself. That's sort of where I thought we were in August, when we couldn't make hay of Mag 7 earnings. We couldn't make hay of this piece of data or that piece of data. NVIDIA gave us a day. The Powell gave us a day. CPI gave us a day. And nothing could get anywhere. But then, of course, with this CPI number, it broke out. And that obviously wasn't it. So at some point, everybody that's long is long. But where that is, who knows?
Too much thinking.
But
Right.
I would say my favorite name to be long right now is Amazon.
What do you think's the next headline out of Amazon? TikTok?
Yeah, I think there's going to be some mega AI release from them at some point. That's no different than the Oracle move or the Google move or the years back NVIDIA moves. They've all got something in the cooker.
Mm-hmm.
It's just not everybody's taking it out of the garage yet, but it's coming.
I mean, if you liked the Tesla move and now you're looking at it and you're going, I should have been in the Tesla move. Rivian, if everything goes up and thinking is not required, Rivian, RIVN, it's got okay IV rank is still in the middle of its range. You sell Vol there.
You're like Tom. Tom's got Lucid. Tom's in bed with the Saudis over here in Lucid. Come on, we got a great American company here. Chart. Yeah, Lucid's a pig. They did a split here, but okay, I feel you on Rivian.
Yeah, I mean, at least this looks like the chart of a stock.
Yes, fairly normal.
But I mean, I'm not gonna buy it. But if you're saying, okay, you know what? Again, we're gonna get this on a T-shirt. But which part of the supernova don't you understand? If that's the story, then and Tesla's made its move, and DRIV, the self-driving ETF, has made its move. I mean, it's surging. Rivian hasn't. And it's got, what 34 IV?
Leapfrog list. Yeah. I like it. At least, yeah.
I mean, I guess.
Would you rather have Rivian or Amazon? I know they're not the same, but
what about Uber? Uber, Lyft, isn't that on the radar here?
I mean, at least Rivian has some IV rank in it. I guess you could, in tasty form, you could sell some premium in there.
Yeah.
I mean, Lyft, Jesus.
Yeah, it's moving with Uber. Uber's at all-time highs too. It's the same story, just different names. I mean, this has been these charts and these moves, these one-day moves are the story of the market. All of a sudden, you wake up one day, there's a headline, and the stock's up 5%. Market's gone basically, has drifted higher, but you're having these 5, 10, 15, 20% moves in stocks. It's like the FOMO's off the charts. That's why you just turn the brain off and just put it all in. I agree with Dylan.
I mean, that certainly worked. That certainly worked better than anything I'm doing. The only stock that I'm kind of persistently long is EWZ, which is the iShares Brazilian ETF.
Okay.
And I've been long it for a good long time. I bought basically year-end calls. So I've still got over 100 days in them, and I've been sitting in these. I have calls at 27 and 29. Just outright, just bought the calls at the money, not even spreads, because it was dirt cheap. We're up to 30 now. I guess that still is a thing.
Mm-hmm.
It's making highs. So if you wanted to do something and not think, that's a thing I'm doing and not thinking.
All right, weekend calls, Dylan. Where are we at? SPX or E-minis? What are we up?
You're saying to this Friday?
Yeah. Expiration, FOMC. No, I
think we're getting I think it's a face plastering. I'm feeling that the Fed meeting is the trigger for a big old sell-off.
Yeah.
The buy the rumor, sell the news. It's finally here.
That's what I'm saying. Well, for a few days, don't get too excited.
Okay, good. Thank you.
6,300 on the S&P.
I like that.
Why not?
I like that. I think I would like to see vol a little bit higher, so I'm going to go with your side, Ilya. 6,300. Yes. Buy that dip, though. That dip.
Let me get a little nibble on the short side before you go, markets. Just let me get a little give back for sitting around all of August and waiting.
Perfect.
With that, overtime is out of time. We'll be back in a mere 23 hours, but don't go anywhere because I'm going to be right back with Macro Money, where we'll talk about all of the event risk that's coming up this week and dissect the Fed in gruesomely granular detail. So don't go anywhere. We'll be right back.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever?
Ever.
Forever?
Ever.
Oh, no. I mean, Tom has a hard job. He's got to wake up really early. But he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy. And I live here in Chicago, so yeah.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to tastytrade. So spread the word and earn rewards. Terms and conditions apply. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options. And I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We start off an eventful week with strength. But is it going to continue, and what are the pitfalls that are facing us in the days ahead? And there are many. That's what we're going to discuss here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here is not surprisingly, surely, focus on the big elephant in the room event risk this week, the FOMC monetary policy announcement, but there is more on the calendar, and that is not the only game in town. So we'll go through everything else that is menacing the markets this week. We'll also go through what happened last week, of course, in terms of price action and economic data, and see how that sets us up for next steps. In fact, we'll start there. Here's what the markets did last week. We can see stocks higher, S&P up 1.5%, ultimately NASDAQ up 1.8%. We continue to see a little bit of weakness at the long end of the yield curve, the 10-year down just a bit, 0.2%. The front end, though, a little bit perkier, up 1.5%, as if to suggest that the markets are happy that we are going to get, or almost certainly going to get, a rate cut this week, but perhaps a little bit more circumspect about just how dovish all of the positioning now looks. And we'll get into all of that. Perhaps the markets see a little bit of disappointment risk as possible. We'll see how that goes. Crude oil still oscillating in familiar territory, up 1.3% this week after a 3.3% decline last week. So just treading water without really getting anywhere. Gold slowing down a little bit last week, but nevertheless making progress, up 0.9%. And the dollar finally starting to show a little wear and tear around all of this speculating about Fed easing. Euro up 0.7%, yen up 0.8%, Bitcoin up for a second consecutive week, 4.7%. So it would seem that it was a generally risk-on sort of tone for markets. Obviously, stocks up, Bitcoin up. It would seem that the impetus for that optimism still is some level of hopium around a dovish Fed and the cheap money that this entails, hence gold, hence the dollar, stronger gold, weaker dollar. The bond market is a little bit interesting in this context because obviously it's had some explosive gains recently, hence the decline, the aggressive decline in yields. But it also looks like maybe there's a little bit of exhaustion there. Maybe the bond market's already made its move and everybody else is kind of catching up. If we look at how we start this week, though, this is what happened today. You can see there's very much more of the same here. Stocks up again. This time, gold up 0.9%. And we don't have it on the chart here, but silver likewise powering higher. Dollar weaker again, 0.2% gain for the euro. Flattish against the yen. That's the most yield sensitive of the major currencies. So interesting thing there. Bitcoin isn't participating. It is down 1.3% almost, but not a big decline given last week's rally. So perhaps just digesting here. Stocks meaningfully higher with the NASDAQ leading 0.7%. percent gain there. S&P up almost 0.5% last time I took this snapshot. So as we look at the start of the week here, clearly the markets are still seeming to revel in a dovish sort of mindset ahead of this week's monetary policy announcement. And perhaps the sort of chipper end to last week follows from what the last bit of data last week gave us. This was the University of Michigan Consumer Confidence Survey, and we can see here that sentiment weakened. Here's all the three kind of dimensions of sentiment in this report. The sentiment index overall fell. The index of current conditions was probably the least hampered, and the decline in expectations was significantly more pronounced. So we can see here that for the overall index that takes in both of these measures, we have a decline that's driven mainly by pessimism about what's to come, not an assessment of what's currently there, which is not what you want to see, needless to say. But perhaps the most important thing here is that the outlook for inflation, this one-year forward gauge, did not go up. Now, it held at a relatively elevated level at 4.8%, but it did not rise. And perhaps that is helping the markets to rationalize that the Fed isn't wrong, that they are not cutting into some sort of an inflationary uplift that's sticky, that we are going to get the version of the world that the Fed envisions, which is to say a transitory rise in inflation because of the tariffs that remains a one-off, because the Fed is not going to ease with reckless abandon, but instead is going to ease in a way that speaks to the emerging weakness in the labor market without kind of taking the lid off all of the progress that they've made on getting inflation back in the box. And so perhaps this helps to explain how the markets ended last week on such an optimistic note and how we're going into this week in such good spirits. For that matter, we can see that the likelihood of a Fed rate cut at this week's meeting is 100%, of which 96% is calling for one move, a 25 basis point move, and a slight 4% chance that we're going to get a jumbo 50 basis point move. But the essence of the disconnect that has existed in markets continues when it comes to what happens thereafter. As ever, we're looking at this outlook for this year and next, and what we find is that the markets and the Fed are very much at odds. So, looking at what we see for this year, we can see that 61 basis points are on the menu. That's 11 basis points in the direction of a third cut beyond an initial 50, and that gives us a loose probability of about 44%. Now, if we look at the CME FedWatch tool and we start to look at this a little bit more granularly, we can see that the likelihood of that third cut is closer to 68% once you take the date of the rate decision in mind. And so when we look at sort of the cumulative likelihood here, we can start to surmise that what the markets are actually betting on here is 3 cuts as more likely than not by year end. And then for next year, of course, we're looking at a very expansive easing cycle, 69 basis points. That's almost fully 3 rate cuts discounted. In fact, if we consider here that we have 19 out of the 25 basis points of that third cut baked in, that's a 76% chance that that third cut is coming. Now, compare that with the outlook that the Fed gave us in June, the last time that they updated it. And of course, they're going to update it again this week. This seems like where the source of speculation is. If the market is 100% certain that some amount of rate cut is coming, and it's not like they're 60-40 certain that it's going to be 25 to 50. They're 96-4 certain that it's going to be 25 to versus 50. There is an immense amount of conviction. If the Fed does anything other than cut by 25 basis points, a level of pandemonium is likely because almost everybody is going to end up looking wrong and have to reposition. But that is overwhelmingly unlikely because, of course, the Fed understands that that's what is likely to happen if they suddenly pull the rug out in either direction. And the Fed is ostensibly not in the business of pulling the rug out from under financial markets. So when we consider it in those terms, we're almost certainly getting a 25 basis point cut. The real question then isn't that, because there's no speculative juice that's left in that idea. The real question becomes, what does the Fed say about next year? Does the Fed endorse the idea that we're going to get more cuts than it's already owned up to? They wouldn't necessarily have to go all the way out to 75. They would ostensibly have to shift this up back to 3.4, where it was in March, where the markets would say, okay, well, the Fed isn't saying that they're going to do just 25 basis points. They're not saying they're going to do 75, but there's another update of this in December. At least they see what we're talking about. They're moving in our direction. That's a level of validation that the market will probably want to get. If that isn't the case, if the Fed sticks with we're only doing a quarter basis point or a quarter percentage point rather next year because we're concerned about the stickiness of inflation and et cetera, well, then there is a meaningful disconnect here. And it's a disconnect that matters. If we look at the way that the risk sentiment story has lined up with the Fed story, as we've discussed here before, but we'll review in short order here, since early February out to the lows in April, stocks and the Fed outlook were moving in tandem. Stocks were falling. The outlook was getting more dovish. Why? Because there was a growth scare. Markets were saying, oh no, business and consumer confidence are falling off a cliff as these tariffs are getting rolled out. That's bad news. We are going to see more rate cuts, and they're all going to come to counteract whatever emergency these tariffs are going to create. Then in April, there is a bottom as the White House backs off and says, okay, 90-day pause, hold on, this is crazy, let's back up. And there is a kind of moderating. And so we see here that from these bottoms in early April, here for stocks, here for Fed policy, we start to recover. But for stocks, obviously this keeps going and is still going at this point. For Fed policy, the growth scare ends right here, right around mid-May. Notice where that is for stocks. Right there, the same spot where the markets initially started the sell-off with a break of the range from the beginning of the year. What then does the rest of this rally mean? Well, you can see that up to this point, since the beginning of the year, stocks and the Fed outlook moved together. At this point in mid-May, things diverge. And they diverge because the market is baking more and more easing into 2026. Notice the outlook for 2025 basically has a range. Here's the range bottom here. We're at the range bottom. Here's the range top right there, but it's basically a range. And the midline of the range here is right around this 50 basis point level. That's somewhere in here. And what we find is, of course, that is exactly what the Fed was forecasting. From 4.4 down to 3.9, that's 50 basis points. So, as of mid-May, the market anchored where the Fed told them to anchor. But then for 2026, we have all this dovishness. And ostensibly, it is this promise of cheap money next year that gets stocks into this relentless march higher, whereby apparently nothing matters. And if the money is going to get so cheap, well, then ostensibly that makes sense. You can make whatever mistake you like in the markets, lose some money, borrow it back cheaper, go again. And so, if there is something in this summary of economic projections that the markets smell isn't validating of this, if the Fed is going to remain somewhere here, and if they are not going to validate all of what this is now, well, then the basis for the stocks rally is perhaps getting taken away, in which case there's probably a sell-off. And that's the risk for this week's policy announcement. Now, the dollar may have sniffed this out already. Interestingly, even though the outlook has been getting more dovish, notice the dollar hasn't made a new low since early July here. Now, it's back into that low, give or take, but it does appear to be trying to bottom here, even as the outlook gets more dovish. And so perhaps we are, in fact, at a turning point, both for stocks and for the dollar. Outside of the Fed policy announcement, over the next 24 hours, we're going to get U.S. retail sales data. The expectations here that we're going to get a decline in the pace of receipts growth, 0.3% expected. That's down from 0.5% in the prior month. Of course, we just saw that consumer confidence has been inching lower. So maybe we have the recipe for the retail sales to weaken. And indeed, the first 6 months of the year already gave us the weakest consumption, looking at the GDP data, since the first 6 months of the COVID lockdown 5 years ago in 2020. So this is already soggy. We'll see what ultimately happens here and whether this data means anything with the Fed due the following day. We're also going to get a monetary policy announcement from the Bank of Canada. The expectations here is that after some period of pause, which we can clearly see right here, we're going to get a rate cut from 2.75 down to 2.5. That would be back at this stage here to the lowest that we'd seen going all the way back a few years here. The last time that Canadian rates were at 2.5 was in August of 2022, sort of midway through their rate hike cycle. So we've just about erased half of it at this point. The move is, of course, widely expected, and so it's unclear what it means necessarily as far as price action, especially since it is coming the same day as the Fed. So this seems unlikely to have a gravitational pull of its own. So we'll see what this does, but the Fed will probably subsume all of what's going on in the markets that day. We are also going to get a monetary policy announcement from the Bank of England. That one is coming on the day after the Fed, so maybe we'll get a little bit more action here. The expectation is we're going to hold rates at 4% unchanged. However, the markets are going to be very interested in the voting tally. The way the Bank of England works is one policymaker, one vote. There's 9 of them that vote. The expectation is a 7-9 vote to hold things unchanged and a 2-9 vote for a cut. That's much more conviction than we saw in the prior month, where unexpectedly the voting tally was down to a single vote margin. 5 out of 9 voted for a cut. 4 out of 9 voted to hold because inflation in the UK is heading higher. And indeed, if we look at the data on the calendar here ahead of this BOE policy announcement, we are going to, on Fed Day, so take this with a grain of salt, but we are going to get UK inflation data. It is expected to hold unchanged this go around at 3.8% year on year, which is the highest reading since January of 2024. So ostensibly there's a lively debate going on at the Bank of England. The British pound has been relatively strong here at the start of the week, ostensibly in anticipation of this. The dovish Fed and maybe a Bank of England that's a little bit more convinced that it's done cutting. We'll see how that goes. And then, of course, rounding out the week, a monetary policy announcement from the Bank of Japan. They also are going to have inflation data coming out ahead of their policy announcement. The expectation for this one is we're going to remain unchanged at 0.5%. Bank of Japan has been the only central bank in hawkish mode, but also the level of rates here is obviously a pittance relative to everywhere else. Inflation in Japan continues to decline, 3.1% in July, and the expectation is that we're going to continue to go down to 2.8% on this incoming decision year on year. That's the lowest reading, or would be the lowest reading since November of 2024. So perhaps not a case for the BOJ to continue to hike rates, and so perhaps this decision not a controversial one. So the Fed's still the name of the game here. Positioning-wise, just a quick update. I'm sort of straddling the fence here. Obviously, stocks broke out last week, so no point to holding those put verticals, so those got taken off with small losses. I'm straddling the fence in the sense that I am both long the dollar and long metals, so I'm in a sense kind of hedged ahead of this Fed meeting to some extent. Long gold, long silver. In the case of gold, by selling puts. Obviously, this position has been on for quite a while, and just as of Friday, long silver, just a call vertical there, and long the dollar, looking for that bottoming to continue, and doing it through the euro, short 2 micro euro futures there, essentially looking for that bottoming that we just talked about to survive the Fed policy announcement. So we'll see how things go, and if these markets give us an opportunity to enter something else ahead of the announcement. But that is macro money for today. We are here as ever Monday through Thursday, right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily, covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
All right, we're back. Taste of Crypto Show. I'm Dan Cecilia, and with me today, we've got Cole Kennelly, founder of Volmex and creator of the first tradable Bitcoin volatility indices, BVIV. Cole's a regular on the show and always brings us really unique insights about crypto volatility. Cole, welcome to the show.
Hey, Dan. Thanks for having me. Excited to be here.
Yeah. Thanks for joining us. Love having you on. Love chatting BVIV and the volatility indices. So let's just hop right into it. What's the current state of the crypto implied vol market? I know the BVIV index was recently mentioned in a CoinDesk article about sort of Bitcoin's boring price action, as they phrased it. But what do you think, this volatility environment means for Bitcoin?
Yeah, so crypto, it's an exciting time in crypto. Today, BVIV, well, so Bitcoin is at about 1,500, 1,115. ETH is about 4,500, and the BVIV and EVIV indices respectively are about 30, 37, and 65. And so, um, sort of subdued volatility, implied vol for Bitcoin and Ethereum. These are kind of like local lows. I think that there's some reasons for that. The market's been sort of range bound. Some of the digital asset treasury companies have desks that have been selling options and suppressing vol. And so it's an interesting backdrop. You've had a lot of these Bitmine inversions. Yeah, obviously MicroStrategy, MetaPlanet, continuing to buy Bitcoin and perhaps run different yield things in recent weeks. So interesting backdrop. It's September 15th now. Seasonality, summer seasonality is kind of ending in crypto. So we'll see what the rest of the year holds. Should be a big last 3 months of the year.
Yeah, for sure. It's definitely an interesting environment. It's definitely a really fun time if you're deep in the trenches and paying attention to the crypto markets. Even with the historically low volatility, price action on the majors. There's a ton going on outside of that, especially like on chain in the perps markets. But one thing you mentioned was the digital asset treasuries, the crypto treasury companies, how they're suppressing volatility. We've actually had a few other crypto options traders on the show and analysts on the show, and they specifically mentioned Saylor's MicroStrategy, that ATM sort of vehicle is actually dampening and suppressing volatility because there's no yield component to it, there's no staking component to Bitcoin. So the way they're creating these structures, they're basically buying Bitcoin and suppressing volatility. So just interesting to note that we're seeing that show up in the BVIV, the volatility index. So the CoinDesk article that I'm referring to, though, it mentioned that the index is close to reaching historic lows not seen since 2023. It's, right now we're looking at 36, 37 on the BVIV. That's indicating what, a 37% annualized vol, which is close to historic lows. Do you think we go lower, or do you think we're due for a spike?
So yeah, really interesting times. I think that so Volmax is sort of agnostic. We are an index creator, and we don't trade or take views. But my personal view is that we're sort of at that point where vol can't really go too much lower, and whether we see sort of a breakout in Bitcoin and Bitcoin goes to say 130, 150, we could see some positive spot vol correlation, or perhaps there's a move to the downside in Bitcoin and Ethereum. Although personally, I'm more bullish than that, but we'd also see probably a little bit of a move up in vol. So vol is definitely low right now, and I think that 36, 35, 30 handle for BVIV is largely a pretty low vol. So it's a pretty exciting backdrop for everything.
Yeah, for sure. And I definitely think that we have a couple events coming up on the calendar here. I know the 17th, I think, is it FOMC, or the interest rate, the Fed meeting is September 17th. And then October stands out as a significant date for Bitcoin implied vol. Are you tracking those catalysts? Is that something you guys, you think that could be like an indication for movement?
Yeah, I think FOMC is definitely, there's a big options expiry coming up as well. FOMC, if rates remain unchanged, might not have a big impact. But if there's, a decrease in rates, and some sentiment and guidance regarding that, we could see sort of a move in vol, and perhaps the market rallies on that rate decrease, and BVIV perhaps sees a move as well. October, I mean, I think generally, summer's over now. It's September 15th, as mentioned. Look, I think that we could see, some just positive price action going into the end of the year. 150 seems like a nice round number for Bitcoin, and who knows what the future holds for ETH and some of these other assets like Sol. But we definitely could see some large, moves up in Bitcoin. There's a lot of buyers between DATs and, just the fundamentals are very strong. And so I think that it should be an exciting rest of the year. And if we see a rate cut or several rate cuts, I haven't checked the Fed now from CME in a little while, but it would be interesting to see, how the market evolves.
For sure, yeah, and I guess I want to shift over a little bit and talk about some of the research you guys published around crypto ETF options positioning, specifically on IBIT and ETH. You guys put this out on your Twitter account. It was sort of, I think, a summary of some of the research that you guys do over there. But you mentioned that ETF positioning on IBIT and ETH, there's massive open interest growth. Which is signaling bullish, as you said. Is there any, what do you think traders are positioning for? That is it that run up into the end of the year, you think?
It's really interesting. So ETH and IBIT have seen massive growth in the options market in the last year or so since they've been live, or maybe 9 months. This just sort of signals a shift in market structure where, traders increasingly prefer to trade on, regulated venues that are, U.S. domiciled and backed by, a clearinghouse and have, perhaps just a lot of growing liquidity. Things like IBIT and ETH are growing a lot. We're seeing that now IBIT is about 70% of Deribit's open interest. There's a couple of different, positioning notes, but I mean, that's one of the big takeaways is just that things are moving more and more towards the IBIT ETF options, which are highly liquid and, strong counterparty regulated. Deribit obviously is a great firm and now part of Coinbase and has done awesome work over the years, but I think as more and more institutions and sophisticated investors and traders get involved in the, crypto asset space, these IBIT and ETH option structures will continue to grow. And so really interesting growth, 70% feels pretty unprecedented of Deribit's open interest is quite unprecedented. That's, I believe, the highest that open interest level has been, since 9 months ago when these options started trading. And so super interesting times and interesting to see the growth in the, US crypto capital markets.
Yeah, for sure. And I think, specifically over here at Tasty, we are seeing the IBIT and the ETH is a very popular option trading product. Obviously, it's one of the ways that retail traders can get exposure to derivatives in the asset class. So it's definitely a very popular product. It was a successful launch, to your point. The fact that it's reaching 70% of open interest compared to Deribit, which is the major spot, option market for sophisticated traders. I think it signals, just an amazing successful launch, and people are interested in this asset class, especially, retail traders. Something else that I found interesting in that research note you put out was that you noted that onshore U.S. traders are buying more calls in Bitcoin versus offshore. There was a big difference or big gap between behavior between onshore U.S. traders and then offshore, in that the onshore traders, with the positioning is much more bullish. Why do you think that is? Do you think it's due to different types of traders, or why do you think that is?
Yeah, great question. I think that, Deribit's obviously a super strong counterparty. It's now owned by Coinbase, which is a, public company and has very transparent financials. But I think that traditionally, some of these more wingy options that are, would pay out more if the market moves a lot in either direction. You've seen sort of a preference from, traders to trade those on venues that are, the strongest counterparties. Perhaps, CME is a little bit less liquid than these IBIT options, are definitely much less liquid. But something like, a futures, an options offering on CME, or, an IBIT, options as well. And so I think that, some of these more wingy options that have a higher, payout if the market makes a substantial move, it bodes well with the sort of highly regulated clearinghouse-backed markets like IBIT or some of the other regulated venues have. And so, I think that could be part of it. Perhaps, the U.S. traders also just prefer those structures for various reasons. But I think that, as mentioned, with the counterparty strength has a big piece to do with it.
Yeah. It's an interesting note because I think it's the options market specifically in crypto is a much newer, I guess, tradable product onshore here in the States. So it's kind of interesting to me that people onshore, traders onshore, retailers, speculators, whoever they might be, they're scooping up calls. They're positioning themselves for that, kind of like, big bullish move to 150. And, you look at offshore and you think, at least I thought, maybe they're a little bit more institutional or they're hedge funds that are a little bit more sophisticated. And they're, like you said, they're maybe structuring it as a hedge or they're kind of, doing different spreads that might signal a different, market position. So I think in any case, it shows the demand for crypto options in the States. And to your point, Deribit, that was acquired by Coinbase, it seems like we'll get, it'll be a pretty big popular product once they launch spot crypto options, in the coming years, months, whatever it might be. So I just thought that was an interesting thing, point from your research note. Another thing that I want to touch base on was the put call ratio, because you noted that there's a wide divergence between Deribit positioning in that put call and IBIT positions, right? The ETF, Bitcoin ETF. So Deribit, you said, had about a 65% put call ratio and IBIT only 49. Do you think it's kind of the same reasoning that we talked about before, or is it just that two total, I wonder what you think about that. Is it different traders that are doing different things, or because that to me, that put call ratio difference is something to note.
So it's interesting. I was just thinking as well about the fact that perpetual futures are more ubiquitous in the offshore market, and perhaps, a lot of crypto degens might be trading, a 20x perp, which is effectively sort of a similar, payout to an option. If you're wrong, you're going to get liquidated or lose your premium. If you're correct, you're going to, increase, sort of exponentially in terms of, payout. And so I think that perhaps the availability of perpetual futures in the offshore market, as well as, counterparty strength and wanting to trade sort of more wingy options on, U.S. regulated venues that have transparent balance sheets and the backing of clearinghouses, could be the reason for this, delta in the put call ratio. And so, next time we publish one of those research updates, KG and I can come back on the show and can talk even more about it. So yeah, those are great. Got really good pickup last time.
Yeah, for sure. Yeah. I think it's interesting you mentioned the perps market, because I wasn't even really thinking. I wasn't really thinking about that. But to your point, like that type of trader who might be participating in perps, they might be using the offshore trader that's trading perps. They might be using the options to hedge, right? Or that their positioning would be different than sort of a retail onshore trader that's just like, I think Bitcoin's going to 150K. Let me just buy a bunch of calls on IBIT, right? Like, I think it's a totally different mindset and trader behavior that, so I do think there's something there, and maybe there is a trade or something that we can have KG and some of the guys on your research team talk about, or just dig into a little bit more. But I do want to shift a little bit to ETH, because I think ETH has been particularly bullish since the last time we talked, where we've had that run up in July, August. We're still trading at about 4,500 on ETH. The EVIV's at about 65. So are you paying attention to anything in ETH, or even further out, like Solana? Is there anything that you guys are looking at over at Volmex that maybe these like altcoins or coins other than Bitcoin, just kind of paying attention to there?
Yeah. So ETH, over the last couple of months has seen, the inception of several treasury companies, including SharpLink Gaming and Bitmine Inversions. Bitmine Inversions has, I think, accumulated about $10 billion of ETH now, which moved the price from 1,700 or so to 4,500. I guess where it's down to, it's 4,500 or so today. And so I think the velocity of these digital asset treasury companies, DATs as they say, has had a big impact on the ETH market. Clearly, I saw a tweet a little while ago about how ETH DApps had acquired more faster and a larger percent of the market cap or the circulating, more than Sailor ever did. And this had a very visible impact on the price, right? Where ETH went from, 2,000 to 4,500. This is a massive move for what is today like a $500 billion market cap asset. You're sort of seeing a similar precedent around some of the Sol DATs, not precedent, but just like similar evolution of like large DATs coming into the market, specifically this DAT that was launched over the last couple of days by Kyle at Multicoin, Jump, and Galaxy called Forward, or Ford is the ticker.
Ford Industries, yeah.
So they had bought, basically, raised $1.6 billion and, deployed it into Sol over the last couple of days, actually. Over the weekend, there was some, on-chain activity I saw on Twitter with Galaxy facilitating some of those sales or purchases. And so, I think, SVIV is something to track. The 14-day SVIV index is at 71 right now, which seems a little bit low compared to where it's been over the last couple of weeks. So it will be interesting to see how these Solana DATs and ETH DATs evolve. There's obviously a native staking rate with something like Sol, something like ETH, as opposed to Bitcoin, where the yield primarily comes from selling options. And so perhaps, these ETH DATs and Sol DATs employ more DeFi strategies. I believe that's what the Ford company has talked about, is, deploying, borrowing at like a 4 or 5% from like stratified banks and, different sort of lenders and deploying in DeFi and, at like a, 12 to 20% rate, which is sort of like a carry trade or an arbitrage on TradFi to DeFi. And so it will be interesting to see what some of these, emerging DATs do. I think, Sailor has less options available for generating yield and creating, yield for investors in MicroStrategy. Whereas if you have the ability to use DeFi, you have a lot more, options at your fingertips. And so definitely interesting what's happening with Sol. Sol's at 235 today. And then, of course, Hyperliquid has been, the talk of the town for the last number of months. Hyperliquid is at a $53 billion, FDV right now, just defying gravity, and super interesting to see the growth of, the Hype token, the Hyper EVM, and, some of the things happening with Hyperliquid. There's been some DATs in Hyperliquid land as well, I guess, to that point, like Hyperion DeFi. And but yeah, I mean, there's a lot of stuff happening across, just broadly development in that ecosystem, as well as, Sol and ETH as well. So yeah, I mean, on my watch list, I of course have BVIV, EVIV, SVIV, but looking at Bitcoin, Ethereum, Sol, Hype, obviously the VIX, and some of the other Volmex indices. So yeah, great question, Dan.
Yeah. So I think those are all great points, and obviously I've been following Hype. I think it's been a crazy trade. It really is one of the most successful protocols that has launched. Obviously the most successful on-chain perps protocol, and you mentioned that with this DAT trade or this DAT trend in tokens other than Bitcoin, most of these tokens have a staking and a yield component to it, right? So there's a lot more there's a lot more that these companies can do, right? There's more, like they can generate yield easier. They can create different flavors or different payoffs by tapping into DeFi and holding spot on the balance sheet, but tapping into DeFi with the funds traded and creating some type of yield for users, or for holders rather. I think, the one thing that is interesting to me at least is how quickly this trend went from like Saylor, Bitcoin to Tom Lee, and now it's completely shifted out to like we're getting into hype. I saw a Doge one, obviously Solana, and I think Solana's a good trade. I think the backers of that Ford Technologies seem pretty. I mean, they're pretty heavy hitters, so definitely paying attention to that and seeing where Solana price goes. But hype is one where I think over the weekend or over the last couple of weeks we've been following this stable coin thing, USDH. I don't know if you paid attention to that at all, but it's definitely a trade where I think we got more room to run, and the fact that somebody's launching a DAT or somebody's sponsoring a DAT for hype, I don't know. To me, it's exciting, but it might signal, maybe altcoin season is here. So definitely paying attention to that.
Yeah, I mean, it goes out farther on the the tail than just hype. You have things like Sui and BitTensor, and Athena had a pretty successful offering. Yeah, I mean, I think that there's definitely obviously like a DAT mania, but these structures allow for public market equity investors in the U.S. to access crypto assets, and also for the the firms and the managers that are running these to have more flexibility over the way they utilize these assets, right? I believe with like so none of the ETH or the Sol, there's like a Sol futures ETF as well. These obviously don't have the ability to stake, and when they do, it probably won't be at full capacity. And so having the ability to invest in a DAT that's able to stake, able to use DeFi, is a lot different than an ETF. And for something like Athena, which is a legitimate project with 10, 15 billion FTV, they're not going to get an ETF tomorrow. Realistically, could make sense to tap into the capital markets in the US and globally via sort of a digital asset treasury company. And so in some cases it makes sense. In some cases, I'm sure a bunch of these will unwind and not work out. But I think it's net positive for the space, and it brings in awareness. And it's interesting, to see like Saylor started buying Bitcoin in 2020. There was a couple other players, smaller players. There was like Semler Scientific, and then Metaplanet was the next one, but it didn't catch on. It's mid 2025 now, and DAT mania is kind of rocking, which obviously looks like a bubble, but it's not. There's a lot of there's like positive facet to a bubble. But yeah, it took a while for the DAT thing to fully ramp up. I mean, Saylor was probably trying to convince people for a long time, but wasn't really going anywhere. So interesting times, and we'll probably see before our next chat. Not sure when that is, but we will maybe see a couple implosions, or we'll have to see what happens with this Forward Industries or Tom Lee. It seems like the velocity of Bitmine, for example, has sort of cooled down a little bit, or SharpLink. I mean, I think Tom Lee was getting a little bit of blowback. I have a lot of respect for him, and he's wildly successful, but his DAT had bought like WorldCoin tokens or something, or participated in like a WorldCoin DAT, and people got kind of annoyed and said, hey, like, is this an ETH DAT or what is this? And so I think there's a lot of open questions about these, how they play out, but there will be a couple of winners. And MicroStrategy just has so much Bitcoin, right? They have like 3% of the entire supply, which is like really wild. So I think that we'll have to see what happens, but there should be a couple big winners across, or maybe at least one across Bitcoin with strategy, but ETH and Sol, and hard to say what happens outside of those. It's not clear that I don't think every asset, of course, needs a DAT. So, time will tell.
Yeah, exactly. I think to your point, I generally view this DAT trend as a positive development, right? For access to these other assets, to give investors access to the other assets through, traditional equities. But to your point, there's probably a downside, right? Because the further out on the risk curve we get, and the more, behind the scenes yield games they play, maybe there is an unwind there, or maybe, at some point it's not sustainable. We'll be monitoring that, and I'm sure we'll see BVIV move, and we'll see some of the indices move on these once that happens. But generally, I think it's positive. I think it's a fun trend to watch. It's a fun trade to be in if you're a trader. So I actually built a watch list of I've been just compiling all of these DATs that get announced. I think it's interesting that like Sui and like WorldCoin and BitTensor, is coming out with some. So I think that's like an indication to me that, hey, maybe we need to take a pause and take a step back and just kind of see what happens. But yeah, I think it's all generally positive. I think it signals, interesting times for the space, and we'll be monitoring it as we go forward. Cole, we got a couple minutes left. I just want to give you a chance to sort of talk about some of the some of the VolMX indices, what you guys have been doing lately, and just where people can find you if they want to follow more.
Yeah. So we have some big plans. We're going to be getting more involved in the Hyperliquid ecosystem. We are really excited about HIP-3, which will allow for, non-standard markets, meaning like not just another coin or token to be listed on Hypercore. And so we have some plans on that front. We have a number of other milestones coming up. We're excited to list on more exchanges. Recently, actually, we launched a collaboration with Bybit, where the BVIV is now the only is currently the only implied vol index available on Bybit, and you can use it to gauge some of their earned products, which involve options. And so we launched some cool collaborations recently. So now BVIV and EVIV are available on TradingView, CoinMarketCap, Bybit's analytics section, and the Earn. And we have 4 futures across 2 markets. We have a Bitfinex future for BVIV and EVIV, and a G-Trade future for BVIV and EVIV. And so super excited to bring BVIV and EVIV to Hyperliquid via HIP-3. That's one of the most important and exciting things on our roadmap. We'll be rolling out other partnerships as well. I mean, ultimately, BVIV is this sort of modular, index, which can be, brought into any sort of wrapper. And so, you should see futures, options, prediction markets, all the above, make BVIV tradable. So yeah, follow us on Twitter, VOLMEX Finance, VolMX Finance. Check out our website, volmex.finance. Add BVIV to your watch list on TradingView. Search for VolMX or Bitcoin Implied. You can track it in the CoinMarketCap mobile app or web app. And so, yeah, I mean, we have some really cool stuff coming up for the rest of the year. So stay tuned, and great to be here. And yeah, I guess in terms of the trades, I mean, vol is quite low right now, so could be an interesting time to express a view on that. But maybe we talk more about that on the next show, or we'll be talking about that on Twitter as well.
Yeah, for sure. And I definitely want to chat more through that, because I think it is an interesting time for Bitcoin vol and vol in the space in general. But we only got a minute left here. I appreciate you coming on, Cole. Any of our viewers, if you guys want to trade volatility, if you can, check them out on Gains Network, Bitfinex. This is basically crypto's version of the VIX. It's tradable. It's it's liquid. It's getting listed on other venues. You can track volatility this way. It's a very useful. VolMX indices are very useful for tracking what's going on in the crypto market. So if anyone wants to check them out, feel free to hit up Cole, or you can message me and I can get you some information. But Cole, thanks for coming on, man. We'll chat soon, and as always, appreciate you, and we'll see you next time. Peace.
Thanks, Dan. Talk soon.
Yep.
Cheers.